Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking metals, specifically gold futures. Gold finished at 1251 and a half, up about $6, about 610 to be exact. A lot of the gold push came today from yesterday's Fed minutes as they were released. And when you looked into the Fed minutes, as you dug deep into those, not just on the headline data, it looks like the dollar could go either way off of what the Fed said. A couple of things were troubling, namely their compulsion to look at equity market valuations. The Fed mentioned in there that equities seemed rather high, which is kind of a strange thing since their mandate is full employment and price stability. And when I mentioned that the dollar could go either way, I'm referring to the correlation between gold and the dollar, or rather the inverse correlation. One of the things that people took out, or traders took out, of this particular Fed minutes was that the Fed might actually slow down interest rate hikes in order to start lightening up on their $4.5 trillion balance sheet. That was actually in the minutes, that they were looking at starting to reduce the balance sheet this year. Most forecasts didn't have them touching it till sometime in March of 2018 or later. But most traders seem to think that they won't do both at the same time. They won't lighten up on the balance sheet and continue to raise rates. So you look at that from a perspective of the dollar, and that could hike long-term interest rates, but not necessarily affect the dollar directly like the short-term interest rate hikes combined with a reduction of the balance sheet would. Then you take events like Syria and situations like the Syrian civil war. The gas attack yesterday caused President Trump to react very emotionally and talk tough. And now I'm not good at quoting, but I'm very good at paraphrasing. And what Trump really did paraphrase was, this particular chemical attack and what's going on in Syria now is my responsibility. He essentially said that. And he seems to be implying that action in Syria could be swift and could even be unilateral, that the U.S. would actually act on their own. This could put a real bid to gold if something like that happened. And then you combine it with Rex Tillerson today, the Secretary of State, definitely took a stronger tone, a very definitive tone, in his opening comments with the president's meeting with China and President Xi from China. Now, obviously, Rex Tillerson's going to be in the meeting, and he took a tone of essentially saying, we are interested in the American workers and the American workers' interests only. And that's what we're going to be discussing, and we won't shy away from frank discussion. That's not a very diplomatic tone. It's definitely a change in tone from past administrations and Secretary of State Kerry, and even going back to Secretary of State Clinton. It's not a terrible plan to have, but it's kind of an odd stance to take publicly. And that could spike gold as well if you see comments coming out. You don't want to insult China in these meetings, at least if you're looking for the dollar to keep its strength. This is Bob Iaccino coming from the CME Group trading floor in Chicago, talking gold futures.